Hello and welcome to a brand new show of Market Makers. 2 years into the Modi government, it's time to perhaps take a realistic assessment of how things stand, where progress has been smooth, where there is some degree of disappointment, and what could be the shape of economy going forward, considering that a whole slew of reforms have been unleashed. To talk about valuations, risk-reward ratio, and more than anything else, the margin of safety in this kind of a market, I have the perfect guest with me, Raamdeo Agrawal of Motilal Oswal Financial Services. Raamdeo, fantastic to have you back and thank you for joining us. Earnings season is about to end, and this time around, for a change, there is a mild surprise. So is the economy healing in the right direction, and do you think most of the earnings momentum, earnings sprint, is that behind us?
Looks like, if you look at the X, of course, this is the worst for the public sector banks. But if you leave aside the public sector banks, then say we were looking at about 150 companies which are on our coverage. So there we see we were expecting about 4-5% kind of aggregate growth in profits. That is turning out to be more like 7-8%. So clearly, even what was just before the earnings season started, we do the estimate. So even by that it has beaten. It means that things are turning out to be slightly better than what was expected. So clearly things are stabilizing for sure.
Which are the data points which are convincing you or which are making you feel happy about the economic progress?
Right now, of course, the automotive demand, particularly the trucks and all, that nobody buys trucks for for entertainment or anything like that. This is not a discretionary stuff. When there is the actual demand, then only you put up new capacities. So 20, 30, 40% growth in the truck demand. New trucks are being sold, that too of the larger sizes. That clearly tells me that something is happening in some part of the economy, if not all over. At least say road building is on. Some more constructions maybe in housing things are pretty good. Mortgage demands are quite robust. So there are pockets of clearly positive. Say cement demand is good. So those things are visible. But is it a wide spread? That's not still happening.
An old-timer on the street would say that in May 2014, if you bought the index, it's not been a very rewarding experience. Even though government has unleashed a slew of reforms, starting from DTB to tackling corruption, what's happening on the road sector, what is happening in the financial sector, a lot of big reforms have kicked in, yet the index has not obliged.
So markets are not a linear one-to-one correlation that Delhi does one thing and market will respond, and hence Delhi has done 50 things, market should be 50% up. It doesn't work like that. But one fine day, I run a company which is listed, so I know the behavior of the market. Market has its own, when nothing has happened, market will triple. And when a lot of things have happened, the market will go half. So market has its own mind. People, it is like today's opinion is today's price, tomorrow's opinion is tomorrow's price. So still people have that lethargic opinion that this government is doing good, but it is probably not achieved enough for me to significantly relate to prospect in the immediate future. That's the general going opinion. I was there in overseas trips also last month. I went to US as well as the UK, did roadshow. I must have met 25, 30, 40 big clients. So everybody is in the same mood that India is the toast of the year or at this point of time in emerging markets. But should we go whole hog into India? Because currency has been very weak in last 4-5 years. So that's one thing which is hurting big time to them. Second, still that earnings growth, broad-based earnings growth should be visible. But there is a complete difference between last year and this year. Last year, at the same point of time, everybody was complaining that what Mr. Modi said, it has not happened. This year, I have not heard one guy asking what the government is doing or how is Mr. Modi. Nobody asked that. So there is a change. Clearly, there is a change on the ground. And people are happy about whatever is happening. They're just biting, maybe monsoon, maybe whatever we are looking for the fresh move. Everybody is watching that.
Ultimately, markets are they only follow one simple fact, which is earnings and where earnings are headed. So what is your view on where earnings are headed? Because without getting into the technical aspect or the macro aspect, it is important for investors to understand the earnings landscape.
Yeah. So nowadays talked about too much. What happens is that even earnings, nobody can forecast that precisely. Till it start, when will it turn around, at what pace it will turn around. But markets will be very smart counterwise. So if something is happening in my company or something is happening in some other company, the companies and the, of course the owners will know ahead of time that things are turning around. And more importantly, the investors which are following those companies, they will have inkling that, okay boss, order book is building up, margins are expanding. So next few quarters are going to be very good. So, and hence stock will start moving before the earnings come. And accumulation of this 30, 40, 50 stocks, that will start pushing the market at some point of time. So actual announcement of earnings, see, smart money will move ahead of the earnings growth. And when earnings growth come, then dumb money will come in. The all dumb institutional money will come much later. But smart money will move much earlier into the market.
So this is the right time to buy, because right now if you're buying, you're actually buying the earnings recovery. You're not trying to buy stocks post the recovery.
Yeah, see, Nico, I'm not a market timer. So leave aside me, in the sense that this is not about, for me, if I get a company which is very good, because see, every company is not timed to, top down, that when the economy does very well, then only the companies do well. It's not like Infosys up 6,000 times in 20 years, or maybe 8,000 times. Economy is not moved by 8,000 times. So when Infosys was available at 50 crores or 100 crores, 200 crores, you didn't need market to be up or down. You needed vision, courage and passions to buy that stock. So investing is very different from timing the market. In fact, you don't have to time the market. You have to time the stock. You have to find the stock and buy at a point of time when it is leaving margin of safety in purchase price.
But you do need tailwinds. You need headwinds. These are, you need tailwinds for a sector to do well.
Yeah.
So how are you judging the tailwinds then?
Yeah, so it is very company specific issue. Say like two-wheelers. Now for 5 years, 2 year industry is flat. Industry is not grown. Maybe grown at 1%, 2%. But look at Eicher. From nowhere it has gone to 10x, 20x. By selling something which was completely, it was right in front of us and yet out of sight.
You don't think RE is a fad?
See, I made a lot of money out of that. So I would not say that, but it's a consumer. See, you can't, Kinetic Honda launched the scooter and nobody liked, there was a huge queue, 20 years booking was there. But ultimately that product didn't do well.
But the fact that promoters of Eicher Motors are selling down now, they've reduced their stake.
So they also have a right to sell, yeah.
So it is not an indication that the deepest insider is exiting?
No. I would not read in that anything malicious or anything like that. But if somebody has to buy a big house or somebody wants to bit of diversify or something, I don't think there is any harm. Bill Gates and all have been selling Microsoft for so many years. And best of Microsoft will be still ahead. We have to, as a market, we have to mature that. You have to allow entrepreneurs to encash on what they have created.
So a token sale by the promoter is not something which you would be seriously bothered about?
No. See, it is a thing to notice that somebody sold. It's an important development, but I would not read that much.
It will not influence your investment decision?
No, definitely not.
The value migration within the two-wheeler space clearly is happening in the entire niche two-wheeler pocket. What are the other pockets of value migration which you can spot for us?
See, I think banking now with the new, there's a huge revolution which is on. Under the new governorship or, the kind of deregulation which they have done is not funny. They've given distributed license to microfinance companies. They've given those small regional banks also, and now license on tap. Today it's there in the paper. Our name is also there as potential, possibilities and all. But the issue is that if you can get it on tap, this is one country where still 50% of the country is not covered by bank. My village doesn't have a bank. 2,000 population, more than 2 crores, maybe 1 crore plus definitely GDP. There's no bank. People don't know what is banking in my village. So unless you open it up, unless you create enough competition, healthy competition I would say, the banks will not go to, my village has 2 telecom towers, but not a bank. So clearly it is required that this thing is opened up in the name of conservatism or to protect the public sector banking system and all. And ultimately after protection, what has happened? You see what is happening. So the protection has worked out against the public sector banking. So it is better that we have a very competitive bank. And without competitive and widespread bank, the entire economy being, formal economy, you cannot take it, it is very necessary if you want to become a very powerful country.
But if I look at the current, Indian financial sector. You got HDFC Bank's market cap on one side. I can put all the other PSU
Everybody,
banks
yeah,
on the other
yeah,
side.
yeah.
So are markets right in differentiating between private banks and PSU banks?
Clearly, see, if anything is run very well, I don't think, I mean, HDFC Bank is not some, owned by somebody. It's a professionally managed bank. And public sector bank can also be very professionally managed. It's just that it was politically managed, I mean, there was a lot of interference in appointment, HR and all that. So you need to, actually we have the best bank and globally acclaimed bank is not owned by anybody. So why can't we find some kind of model for even PSU banks? So I think there are a lot of opportunities which are going to come up out of this. So you have more money than bankers. We need good bankers to be encouraged to do good banking. Look at Kotak Bank. I mean, in 15 years, what they have created.
And NBFC now is a full bank and it is part of the Nifty 50.
And see, everybody is not going to be successful and everybody is not a maverick. Everybody is not a terrific banker. So it's only out of 10 or 12 licenses, only 2 have or 3 have done very well. So that ratio is not going to change. So you have to give, if you want 10 good banks, you have to probably give license to 80, 100 guys. The ratio might be, 2 out of 10 or 1 out of something like that. It will be not more than, I would be very surprised if it is more than 1 out of 4. So if you want 10 good banks, you have to give license to 40, 50 guys, minimum.
So what about the margin of safety for an investor in the private banks? You rarely get good prices when there is a cheery consensus. And there is a cheery consensus with private banks. HDFC Bank or Axis Bank, for that matter, IndusInd Bank, Yes Bank also now. These stocks are at a lifetime high. So for an investor, do you think the margin of safety to buy into private banks is missing?
No, why? I mean, all-time high doesn't mean, if you want to go 5,000 times from here, every week will be new high. So it doesn't mean that you'll never buy. See, that new high is just in fact, it shows that bank is progressing by every week, every month. So all-time high doesn't mean what is the future. See, what do you invest in? You invest in potential of any enterprise, isn't it? Performance is only a guide to the potential.
Yes.
So we give multiples to the current performance, but basically multiple is function of what, how do you value the potential of the enterprise, whether it is a bank, whether it is a auto company, or whether it is any other enterprise, auto company or anything, cement company or anything. So understanding the potential of a business is function of what is the potential of the business and how good is the jockey.
Yeah.
The
manager who is running it.
Yeah, management who is running it. How passionate, how visionary, how much energy is there, what is the value system.
You liked autos in the past and there is a case to buy autos right now because interest rates are coming down, per capita is going to go up. But are you worried about the competition in the four-wheeler space? Are you worried about the competition in the four-wheeler space which has intensified of late? Maruti's dominant market share in the small car market also is getting challenged. So one side, the pie which is expanding, but within that pie, the pie is getting really split.
Yeah, so, every company and every segment one has to analyze. Like, say, in four-wheelers, I think as the economy after a long time is turning around, and we are yet to, I think we are 30-40% below the all-time high in terms of truck sales. So when the economy on a larger base, and at that point of time when the last high happened, it was a $1 trillion economy. Today it is a $2 trillion economy, heading towards $4 trillion economy. So when the build-up stage starts, it will be much, much bigger. So you are at half to, or say 1/4 to where the peak is going to be. So the opportunities in some of these segments like trucks and all are very large. But the rules of the game is also changing because BS, that Bharat 6 is going to come from 4 straight you are going to 6.
Yes.
So it is going to be a perfect storm by 2020 or whatever, 2021 it is going to come. A lot of things will change. Engines will change, the service structure will change. It may even redefine who is going to the winner also, big time. Today winners are clearly Telco, Ashok Leyland, and then there is no third or fourth, So could there be emergence of Benz or Volvo, those guys, they are already on the neck with all the technology and capability and distribution, manufacturing. So a lot of these things have to be kept in mind, and somebody will come from behind and hit you very hard. Like Eicher, but Eicher didn't hurt anybody. They prospered themselves not at the cost of anybody. They created a niche, 500,000 bikes. It doesn't hurt anybody, So it's not like Honda, which is trying to be number one. So from say 10-12%, they want to go to 50%, 40%. So they're wanting to eat off your plate also, which is not the case here.
So the three pockets in the auto segment: two-wheelers, four-wheelers, and commercial vehicle.
Yeah.
Structurally, where are you bullish, and cyclically, where are you bullish?
See, I think it is a tremendous. So far economy was a motorcycle economy. Now it's a car economy. Discretionary spend is heading towards more a mass car kind of situation. And sometime in next 3, 4, 5 years, you see a explosion in the car demand, like what happened in China. Yeah. China used to do less than a million in turn of the century. Today they are doing 20 million. They're largest. So we have that opportunity in next 10, 15 years. So when you talk about playing for next 10 years, 15 years, it is going to be car. And in the car side, you have a very interesting complex situation. Till the affordable segment, the dominance is very high by Suzuki for whatever reason. And others are trying to kind of nibble in that, but still that 40 plus, 45, 50, 52% kind of a share is still there. So I think in this round, they are going to win big. This is the only industry where somebody is running short of capacity. Yeah. And that's where the investment is happening, So clearly that looks to be, that segment looks to be very opportunistic. And then components below that.
Entire supply chain.
Entire supply chain, because if your end equipment, car is going to go, in terms of volume, the components, and good thing is that we have a very good component structure, components manufactured in India, and they're listed. So you'll find some of the interesting component companies also. So I think it's full of ideas in auto space, and some of them might be not looking so good right now, but could just break out with the new leadership, some 1 or 2 product success.
Do you think HFCs have a long way to go? Because that is one segment where the lending has been efficient, the borrowing has been decent. Despite the up and down in the real estate cycle, the NPAs are less than 2%.
Extremely well regulated segment, extremely, and that's why we have taken some interest in that. So that's a very, housing by 22, even if it happens by 32, give 10 more years for that, all the housing. I think the amount of mortgage requirement which will come up with a slightly lower interest rate and subvention or something, I think is something which is, and it has been very well regulated at every level.
And every time I think that HDFC cannot grow at 15-18%, they surprise you with that growth number. Whether it's Growth Finance or Repro Finance or LIC Finance, 15-18% growth is here. So for an investor who's looking for stable returns, can HFCs be still an easy spot to pick?
Yeah, I wish there were some more players, for somebody to identify. But yes, that's one spot definitely I would look at and have in my portfolio for sure. Some portion of allocation on the mortgage side, because that looks to be a very well managed, reasonably priced, and good outlook is there. Good long-term outlook seems to be there.
Are you a bit surprised that markets are not rewarding OMC stocks? They are not getting their due. The dividend yield is strong.
Yeah.
The cash flow generation has picked up. There is a sector which was earlier moving because of whims and fancies of government. Now is genuinely deregulated.
Yeah. So it takes time for the market to believe that government has actually pulled the hands out of that arena. And so market has its own mind. Maybe it will take one more year, it will take one. So every year the confidence will keep coming. But if government doesn't actually, interfere, if by chance for even 2 months or 3 months, some election time, they, by chance they interfere, then again the confidence building measure will require a lot of time. My sense is this government has behaved very well in terms of this thing, but market has their own mind. They have their own apprehensions, and it's a slightly commodity in character also, in the sense that GRMs are fluctuating. It is not in the hands of government or anybody. So half the profit is coming from marketing side, where government has a lot of role to play, but other margin is coming from the GRMs, the refining margin, which is very globally determined, and hence there will be some fluctuation, and that's what is reflecting in this thing. But I take your point, at single digit P multiples, 4-5% yield, it's a very interesting kind of situation. And stock market,
the margin of safety.
Yes,
of course, what happens in the short term is noise and technicals. You know them more than anybody else. And I'm assuming that the viewers who are spending their time and watching this show for half an hour, they are not looking for tips from you. They are actually
Yeah.
looking at mega ideas from you. Now, I'm going to take our conversation back to a point which you alluded to a couple of years ago. And you said that, Nikunj, the art of making big money does not lie in identifying the nifty 50 companies. The art of making big company lies in identifying next 100 companies, and from that pool, which companies can be part of nifty 50. So what is the hunting ground where you are trying to hunt for opportunities? Which are some of the good businesses or great or decent businesses which can become great businesses?
Yeah, so it is very bottoms up. So I read all the 4 newspapers every day morning, peacefully. So this is earning season. So you have to be very careful in seeing where
there is
what
hit
is
and where there is a miss.
Yeah, no. Suddenly, if you expect a company to make say 50 crores and suddenly makes 70 crores, 80 crores, or 100 crores, you have to. And there's a massive beat. What has happened? Like yesterday, what happened in US? 15% sales growth in housing, and the whole market went berserk. So you have to look for positive surprises, and then go after that story. What really is happening there? Because you would not know everything what's happening in which part of the economy.
So what has positively surprised you? What is on your radar?
No. Say like I was talking to my brother about air conditioners. He said last month anything on the inventory got sold. There's nothing left in the air conditioner. There's literally boom about air conditioner demand in the marketplace. So then you have to figure out whether there is any story which you like in that, and then go after that. So, and whether you think it's secular, how big is the opportunity and all. So you have to build a story bottoms up, one by one. So like collapse of oil, collapse of say shell discovery of shale gas and shell oil, and collapse of oil. I think still it is yet to play out. It's just only 12-15 months. See, if oil actually remains at $60-70, $70, forget about 50, $60-70 if it peaks out at that level. I mean, the amount of change in the the derivatives, say whether it is a film, whether it is a pipe, whether it is tubes, whether it is so many, because oil is not going only in the tanks.
Yes.
It's also going as derivatives. And if oil is down and Tesla and all are making petrol diesel cheaper, there is no battery for flying. So what happens to aviation globally? So does it change the economics of aviation at least significantly more at this juncture? So those are things you have to really figure out. If the change in the basics of some cost structure is permanent, in that case there will be derived change somewhere else.
So you're looking at the first order derivatives or the second order derivatives?
Yeah. So then you realize once you invest at one level, then you're like, okay, boss, here's even bigger opportunity, which is not visible to the people like that. So migration keeps happening,
So are we in for a period or patch of big return, big earning surprise, and bumper growth?
I know one thing, that next 10 years will be extremely exciting for investing compared to last 10 years. Are we going to see repeat of 2003, 2007? I don't know. But every bull run is much bigger than the last one. And story and the connotation and from where it comes, what kind of companies win, nobody has any clue till it starts. Many times you come to know only after it has ended that what was the sector which was, like real estate and all last time which happened. This company has bought this many acres in Hyderabad and the stock is up 10%. So I think some irrationality will come, but my sense is that we are in for one good bounce in the market in next maybe 1 year, 2 year, 3 year. Probability of downside is very limited, and a possibility of a good bump up 30-40% in next 1.5 years. I would think between 17 and 18. By 18 we should have a very good year.
I hope so too, because if there is so much of liquidity will not go back into commodity. It will not go back into real estate.
This is a bottom, Ravi. On the low earnings, you have low P multiple. How long can you push it?
The margin of safety is in your side.
Yeah. Now the market cap to GDP is 60%. You're absolutely, downside is limited for sure. And it will be temporary. It may go down by 10%, 15%. It will be definitely limited.
So the pitch for an average investor would be right now that increase your allocation to equities, don't cancel your SIPs, and if you're not invested in equities, the risk reward ratio is favorable. A very simple asset class, allocation question.
This is people must understand their own risk appetite, but if you have decided that I want to be 25% equity or 50% equity, please complete the allocation. because it is not about which stock. Please complete the allocation first. If nothing else, you go and buy ETF. If you don't want any manager risk, or you don't know which stock to buy, at least you go and buy the ETF. Allocate your this thing, and then whenever you find an idea or manager or whatever, you can change over to that, from passive to active. But this is the time to get allocated.
And I was looking for that answer, that the risk-reward ratio in equities will be favorable because the valuations are not that bad.
Yeah.
Appreciate your time. Glad you could join us. That's it on this edition of Market Makers. I'm Nikunj Dalmia signing off. Thank you for tuning in. Thank you for watching the show.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.